Ladies and gentlemen, SoFi stock is now back above $28, closing at $28.14 on the possibility of a very large deal going through. And that's the federal government potentially putting up their student loans for sale. Politico had stated here the Trump administration officials are exploring options to sell parts of the federal government's $1.6 trillion student loan portfolio to private markets. They're focused on selling high-performing portions of the government's massive portfolio of student debts. If they were to sell off the lower rung of those loans, there would be no buyers. So they actually need to find high-quality loans that are actually worth the purchase for a company like SoFi, JP Morgan, or large pension funds. See, the thing is, although SoFi does actually underwrite and hold loans on its balance sheet, it holds just a fraction of what it is needed, right? Out of their entire balance sheet or book of loans here, 35% of them are student loans. That's $10.7 billion that is being held. But even that makes up for barely even a dent whenever it comes to the total $1.6 trillion, only around 0.7% of the entire need. Now, it doesn't mean that SoFi can't still buy a sliver of a potential, high-performing loans. And they've actually just recently raised a bunch of money, $1.5 billion. Potentially that could be used for a great purchase of certain loans that they could end up maintaining and taking advantage of. But there might also be something at play here. Now, Anthony Noto said, if the government backs away from providing in-school loans, Grad Plus, et cetera, we'll absolutely capture that opportunity. By the way, those loans are a lot more attractive than our refinancing student loans. They said they have great ROE and that we would love to do as much of this in the market as we can, so we'd be very happy to step in for the government. This was back in Q1 of 2025. Trump's made it very clear that this is exactly what he wants to do during his term, is sort of, lower the need for the Department of Education, especially on the lending side. And there's $1.6 trillion up for grabs that could end up being more and more towards private markets. They also said there's going to be a higher lifetime value to someone that takes out an in-school loan from us rather than someone that refinances with us. Okay. So this could be a product that they also want to get deeper and deeper in, and now might just be the time. Data-driven investing ends up posting on X that he says, you know what, the real opportunity is in the servicing rights. That if SoFi can end up partnering with some of these real acquiring banks, the JP Morgans and these sort of companies that have hundreds of billions, if not trillions of dollars to throw towards this, that is a way better opportunity for SoFi to take a larger portion of this, being the actual technology on the back end, handling, payment schedules, collecting payments, handle collections, distribute payments, and, paying JP Morgan, these sort of things. And SoFi has done this a lot. In fact, they do it for their own student loans. They've actually done it for JP Morgan themselves. Back whenever First Republic was ended up purchased by JP Morgan, SoFi put in a bid to be the servicer of those loans, and they were approved. So SoFi has done this previously with large companies like JP Morgan and others. That could be the way that they end up benefiting. Not only, as data-driven investing puts it here, did they end up generating some revenue, whether that's, for personal loans or student loans, somewhere around the ballpark of just under 1% of the payments, or it could be fixed fee as well, but around 1% or so of those payments goes towards the servicer. But the important part is the member acquisition. SoFi services the loan, and to the borrower, to these people, right? Although it's actually JP Morgan's loan, to them, it just looks like the loan is owned by SoFi. SoFi is actually giving those payments to JP Morgan. They're the beneficiary of those loans, but to them, they become a part of the SoFi ecosystem, right? The borrower would need to create a SoFi account, become a SoFi member, pay through the SoFi app, and this would be a gateway into the ecosystem for millions of new young professionals at probably very low customer acquisition costs. SoFi could then cross-sell them and upsell them to other products. And if we go back to this part of Anthony Noto in Q1 of 2025, that's exactly what he said. He said, this would be a double bottom line from the standpoint that it would be a revenue stream of sorts today, but then they would become a member and become a part of the SoFi ecosystem, and that would increase the lifetime value whenever they further get more products in the ecosystem. So that's the real key here, is the customer acquisition. But Barron's wrote an article and said, guys, the picture is super clear. The government is clearly wanting to take a smaller and smaller role in student lending. And this could mean that more borrowers start to go towards companies like SoFi's private refinancing options. The Supreme Court just ruled in July that the overhaul of the Department of Education ultimately could continue, and that Trump's One Big Beautiful Bill will limit how much students can borrow from the government. So they think while the federal student loans are still going to be very much in place to a maximum degree, this is what's going to go into effect in 2026, that additional amount will need to be filled by private lenders. Okay. Those types of private lenders could be a company like SoFi. Now, SoFi has only so much balance sheet, as we've highlighted previously. So this is where the loan platform business comes in. Currently, they only underwrite loans and sell them immediately to other companies for personal loans. But Anthony Noto has made it very clear that they want to do this for student loans, for home loans, for everything. So that means that they can underwrite using other companies' capital and find, available loans for, let's say, Blue Owl or KKR or some other lenders that might want to have access to more student loans in America. And SoFi's been underwriting student loans for as long as the company has been around. That's their first product ever since 2013. So they are very good at underwriting student loans, and potentially they could use other companies' capital to fund that. See, the loan platform business is very new. It's only been around for 4 quarters, but yet whenever you compare it to how many loans have been sold on SoFi, so the difference between the loan platform and a loan sale is that the loan sales at one point were owned by SoFi. Then they're transferring that ownership to another business. The loan platform is us going to a business and saying, hey, give us capital. And when we find an appropriate buyer, we'll use your bank account to buy those loans. You can have the full product, but we will service it on our end. So they'll stay on our app, but we will give you all of the profits. Look how quick that has almost doubled the amount of loan sales. It's been 4 quarters and we're already originating $2.4 billion on this brand new product only for personal loans, not student loans, not home loans, but we have the ability to do that today. So this is the way I see it. While Trump is in office, there are going to be massive changes to student loan business. 1.6 trillion is nothing to scoff at. There's going to be big changes regardless. And SoFi is one of the top refinancers for private student loans in the entire market. And when I say one of the, I mean potentially owning 60 to 70% of the entire market. Elizabeth Warren even sent out a letter to Anthony Noto asking him how they are going to take care of these student loan borrowers as more federally funded student loans end up going towards private markets. They are fully aware that this is the direction that it's going to head and that SoFi is going to be a big player here. What percentage of the SoFi stock premium is given to this brand new industry that, they've potentially not even made money from yet on the shift in the Trump administration? So while we're still only underwriting less than $1 billion a quarter in private student loans, this could be a massive industry in a massive way that we acquire new members. So I'm very, very excited. And this is why I bought the dip just a couple days ago whenever we were $25, $24 a share. It was way too cheap, and I was screaming to buy this stock. On top of that, by the way, in other news, we got website traffic updates from SoFi. So let's take a look here. For September, we ended up seeing a little bit of a decrease, okay? But overall, in the quarter, it's much, much higher. But we also saw this same dip, which was actually quite interesting as well last year. We saw a record level of new visits in July, then a record level of new visits in August, and then quite a drop-off in September. That drop-off is almost eerily similar to what we're seeing in this Q3 of 2025. Overall, while it was a slight decrease, this is still by far totaled the best quarter that we've seen for website traffic, and I'm still expecting the highest amount of new members that we've ever seen for any quarter on SoFi. But let me know your thoughts if it's worth it to buy more SoFi here at $28 because private student loans and website traffic is picking up down in the comments down below. Until next time, guys, thank you all so much for watching. Bye-bye for now.